large acquirers like an Amazon.com?
Okay, absolutely. And thank you again for having me here, Pimm. So my job is an M&A investment banker, and my sector focus is e-commerce. My job is essentially to attract and be retained by excellent companies that I can in turn help either sell themselves or raise growth capital. And we take them out to two groups, both strategics, and we also take them out to private equity groups. So as an example, to let you know kind of how close I am to the action, as we bring a company in and I'm going to take it to Amazon, I can typically get a call back in about 4 hours with a decision. Walmart.com has the time down to 3.5 hours. So I'm really
so you're presenting to them possible acquisition targets.
Absolutely.
All right, and now let's talk about e-commerce, and as you said, the 5 things that you've got to pay attention to. And the reason we've got Amazon.com kind of as an example is you maintain there are 2 basic businesses here at Amazon.com. They've got a web services business.
You're exactly right.
Which many people may not know about, but then they've got the regular retail business, whether you buy, you know, shoes or clothing or vitamins or anything.
Whatever you have, sure. So let's talk about the 5 things that are concerning me at this point. First is valuation. We, as a result of an M&A transaction, built an index of 15 companies. 1 year ago today, the stocks are now up 62.5% on average. So I feel, number one, valuations are frothy. Number 2 and 3 are both tax reasons, and 4 and 5 are going to be more financial in nature. 2 and 3 on tax, and this applies to all stocks right now. We're coming up with the expiration of the Bush tax cuts. If I have a long-term gain of 62.5% over a year, I can essentially exit that position. For federal income tax purposes, it's 15% is what I'll pay.
Right, because you got the long-term capital gain.
You got it.
All right.
So the concern is there's going to be a lot of selling right now due to the gains we've had to get 15%, because it may go up to 25%.
Whatever tax bracket you happen to be in,
absolutely,
if the tax cuts all expire.
Right. So that's my first tax point. Tax point 2, as it relates specifically to internet companies, e-commerce companies. We've had for a year and a half too, and you see in the news, Amazon is now collecting sales tax on every transaction.
Right, sales tax on whether it's in Texas or in California, whatever state that you buy things.
Right, so there are 3 problems with that. If we're a top 500 internet retailer, everybody but Amazon. The issue is, all of a sudden, we're going to have this collection cost, which for big companies is 1.5%, to small ones up to 13.5%. Our revenues, based on a couple studies and actual experience in certain states, revenues can drop between 10 and 13%. And then third, high ticket orders, average order prices will be those companies that do that, like a Blue Nile, as an example, that's selling jewelry, diamonds, earrings. Those companies tend to, because of this tax arbitrage, they may go down the most.
All right, so you've got this issue. You got taxes, right? You've got sales taxes being charged at the local level, plus the expiration of the tax holiday.
Absolutely.
And then the frothy, as you described them, frothy valuations. What are the other last 2?
So the other 2 are fascinating to me because, and this is where I can really provide some insight and expertise to the audience. Because I'm running these auctions, I'm seeing what the Walmart.coms, the Amazons are saying, what the large private equity groups are saying, what the VCs are saying. And what they're telling me is, because of this cannibalization that we're seeing, Amazon is really taking prices down so much. What we're seeing is essentially these gross margins compressing. And another way to think about gross margin is to call it a markup. So basically, my cost, I'm marking it up to whatever the sales price is. What these private equity groups and Amazon, et cetera, don't want to see, they don't want to see a compression. They want to see an expansion of margins.
All right, but right now you're saying they're seeing a compression of gross margins. All right, so that's number 4. What about number 5?
And that doesn't make sense because our stocks are up 62.5%, but we have a compression. It doesn't make sense. Number 5, and this is a key one, and I'm sorry we left it till 5. 2 Mondays from now, October 22nd, Amazon is going to announce their earnings for Q3. In Q1 and in Q2, their markup, which we're calling it's akin to gross margin, it was 24% in Q1, 26% in Q2, And if we see anything below 24% in Q3, in my opinion, we're going to have a disaster. Amazon trading at 250 could be down at 200, and in sympathy, the group would, would also
sell off
fall
as well.
Right,
All
exactly.
right, we got to leave it there. We got to watch
Okay.
and see what happens on October the 22nd, leading up to Amazon.com's results. Watch those gross margins. I want to thank you very much, Abe Garver.
Anytime. Thanks.
Good to see you,
Pimm.
All right, Focus Investment Bank. Coming up, we're going to look at the effects of Dodd-Frank and find out its connection to housing and why this is a big concern for those in the housing sector. We'll give you the details coming up.